Please subscribe to the channel, press the bell icon, you'll be notified when Kalkine has a new video. Sage here for Kalkine Media, thanks for joining us. Today's topic covers how to plan your investment with inflation touching new highs. And the risks related to sticky inflation and economic stagnation are hovering over the UK's economy, and their persistence is expected over the upcoming years. And according to the National Institute of Economic and Social Research, inflation levels in the UK are expected to hit 5% next year, which may lead to catastrophic consequences for the country. Inflation, or money losing its value over time, has been a significant issue for investors in the prevailing economic climate, in addition to increasing the burden on the government. Tackling inflation with a savings account is not really feasible in this low interest rate environment, as the rates offered by banks are far less than the rate of inflation. So how to beat inflation? The key to beating inflation is to invest in the stock market and create a highly diversified portfolio which helps in the maximisation of long-term risk-adjusted returns. No matter what the level of inflation is, investments should be made in the companies and sectors which are inflation-proof, and using tax shelters is a great option to protect your investment returns. And despite going for safer investment options, you may be at risk of losing. For instance, rising inflation levels may significantly impact the low-yield, long-dated bonds in your portfolio. And these bonds are sensitive to the slightest changes in interest rates, and thus have the ability to expose your entire portfolio to market volatility. Index or inflation-linked bonds are a better investment option as compared to conventional bonds, as their returns rise along with inflation levels. Analysts suggest that investors should go for companies that have the power to set prices for their products so that the consumers can bear the burden of rising costs, thus protecting the company's profits from inflation. The banking sector also gains from higher interest rates, as the banks can earn more from its lending activities. Exposing your portfolio to mining and energy sector stocks may be useful too in countering inflation due to rising prices of commodities. And sectors like infrastructure should also be considered by the investors, as the demand for new roads, power supplies and telecommunications networks rarely ever fade away. Investors also look at gold as a hedge against inflation for the long run. In conclusion, the poor are hit the hardest due to rising inflation levels, and thus it is more important for the lower income class to protect their savings from inflation. Exploring the stock markets is the best possible bet to beat inflation, but all investments should be made while considering the risks associated with them. And thanks for your company on that report. If you do like the information, please like, share, comment on the video below, subscribe to the channel and press the bell icon to be notified of the latest videos. But for more information and regular updates, please head to the website. It's kalkinemedia.com. I'm Sage for Kalkine Media.